Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, I'll be sharing with you the technical analysis on the currency pair, the GBP to the Japanese yen. So, as usual, we'll be talking on the fundamental analysis before we move right down ahead to the technical analysis. We have noticed the British pound has rallied pretty significantly to break out of the 143.50 zone level. This was a major area to get above, and the British pound has initially tried to rally during the trading session on Monday to kick off the week on the good foot, but has pulled back to form a bit of a shooting star early in trading. That being the case, it looks like we may need to pull back in order to find enough momentum to truly get going. And right down to our technical analysis, this is not saying that you should be selling this pair, rather that you may get an opportunity to buy on the dips, which makes quite a lot of sense considering that we have seen so much bullish pressure in the British pound in general, and of course have seen the Japanese yen lose strength in recent times. So this is mainly a reflection of the coronavirus efforts in the United Kingdom seemingly starting to work, and that of course is one of the most things that traders are focusing on more than anything else right now. Furthermore, there is a Bank of England meeting this week, and we will have to see what they say about negative interest rates, but it doesn't seem to be a scenario that has been taken off the table, adding to more stability for the British pound. Now, right down to our chart analysis, right now the 1 hour time frame, we can notice 142.12, or rather 0.22 is our pivot point, and our preference is the upside prevails as long as 142.22 is support. And then alternative scenarios will mean the downside breakout from this zone, the most recent support zone, would lead us down to 142.22, would call for 1.141.84 and 141.61 in extension. The RSI is above 50, and our MACD is above the signal line too as well. So the configuration is positive. Moreover, the price is below its 20-period moving average at 142.53, but above its 50-period moving average at 1.142.50. And down to our daily time frame, we can notice on the chart, by dating to our most recent daily candle, we can notice our major supports and major resistance at this point. So our major support having it at 143.80, another major support at 143.57, another major support at 143.34, and lastly at 143.11. Also, we have a much more needed support at this zone, which ends the major support zone at 142.53, and then down to our most resistance zone using the wicks of the candles at 142.37, and also 142.22, as well as 141.84, and finally 141.61. So our overall analysis on this currency pair is a somewhat bullish move, even though we are seeing little bit of bearish correction in the intraday levels right now. And as the case is, it's just kicking in for the bulls right away. So within a matter of time, anchoring on this support and a bounce back on a reversal back to the trend before a probable downward pull down of the trend. So what we should be expecting is a pullback to this point, and you should be having nothing less than 25 to 30 pips if you make an entry to this trade for a buy. Then after that, a much more reversal from this exact point downwards to the most extended support zone, which is at 143.138, and entering the trade for sell from that zone will give you nothing more than 70 pips from that trade. So that's our analysis on today's currency pair, the Great British Pound to the Japanese yen. I remain your host, Nick. Bye for now.